January 30th, 2026. I almost had a third consecutive profitable week, but I didn't. And you know what? That's all right. So here's the deal. Before we even get started, we'd like to look at the daily momentum to see what's going on the daily momentum for the Nasdaq. And as you can see, pivot point started, which means we should be anticipating some stalling or a reversal. And look what happened today. Before we even saw anything, we can't look into the future. We don't know what's going to happen tomorrow. So before today even happened, we knew that we had reached a pivot point, a stalling moment in momentum. We knew that we had increasing volume of selling happening. So that's what gave us some strong bias for today to expect a sell-off today. And look what happened. Today we had a sell-off. This kind of pattern repeats all the time. Doesn't mean you can just short, blindly out of the open and win all the time, even though that is a strategy for some folks. But regardless, we did have some serious chop in the beginning of the market, like serious chop. It was very, very hard to manage. But as you can see, we had a bunch of rejections in this area here. A lot of rejections. Hit, rejected, 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 rejected. So by the time we broke VWAP for the fourth time, but by the time we broke this critical level, which is the previous week's high, we really had a lot of bias going for us to take downside trades. Just to go over my strategy here, let's see if it came into effect around here. Let's go here first. Our 5-minute is giving us permission to take trades to the downside. Our other 5-minute, not just the extended hours, but the regular hours, the 5-minute twins are aligned, giving us permission to take trades to the downside. The 30-minute histogram, you can see, is tapering to the downside. Right here, what do you see? We have a volume confluence on this bar right here. A volume bar greater than the previous three. We bump down, so we're on somewhat of the right side of momentum. That is the strategy right there. Entering at the close of the candle, right when the candle closes, when you enter, put your stop loss slightly above that candle or at the previous candle before it. And you sell 80% of the position at that first area, which is about a 2-to-1 ratio, roughly. And you allow your runners to keep on running. So the strategy came into effect many times today, but in the beginning of the market, I took some losses, and we're gonna go over that. We're going to go over it right now. The first trade of the day first trade I took today was Tesla. This was extremely painful. So right here, we had permission to take longs at this current point in time on this candle. We were on the right side of the momentum here. We had a volume confluence. This is the entry signal, my friend. So what did I do? I entered at the close of the candle. I put my stop loss slightly below, like right there. And when that price came down and touched my stop loss and then proceeded to run a million miles, man, I'm so mad about that. Man, I'm mad about that because, oh man, it just sucks. You know what I mean? So that was my first loss of the day because my stop loss, I'm using a 1-minute chart, not a 2-minute chart anymore. So it might be useful to not use such a tight stop and actually increase it, relatively speaking. So worth a review. But either way, I did have the opportunity, once I saw this start to spike back in the other direction, look right here, volume confluence. See this? Volume bar greater than the previous three. We're rising. We're now aligned. Still the 5-minute. This one is not really giving us permission anymore because now it's selling off. This one was selling off as well. So we had weak alignments here, but there was an alignment, and it was a break of that previous level that I entered at. So I could have absolutely entered again right here, and to be honest with you, I'm surprised I didn't, and that's a lesson to remember from today's. Could retested. Maybe I take half of the position size I used originally to go in with slightly less position size to make sure that you're not being reckless, and just enter again. Look what that would have done, man. Ah, sucks. Second trade of the day was a loss. I took a trade right here because of frustration. I had just lost the trade in Tesla. So now I'm frustrated. The 5-minute twins are giving us permission. This one's working down, aligned with the trade. This one is working down, aligned with the trade. And then what happens? We get a volume confluence. But this MACD movement is not clean. It's ugly. We're late to the move. The move was right here. We're late to the move. Hell, we're even kind of tapering off of the move. We're not really building, you know? So that was the mistake, is this wasn't ascending like it should be. It should be expanding in the direction that you want it to be going. This was consolidating, and either way, I took the trade and then immediately got stopped out because the very next candle stopped me out. And then here's where it got even more painful. I took this trade. Why? This is flipping back to the upside. This is not at the middle line yet, so I had jumped the gun and I was trading based on frustration and emotion. We had a volume confluence right here, but we didn't have this aligned. That's one of the major parts of the strategy. So I hopped in, could have took micro profits, but that's not the strategy. And then this ended up being a loss as well. That's another loss. That's 3 losses in a row so far for the day. Right here, I hopped back into the downside. Why? Because the momentum's going down again here. Momentum's flipping back to the downside here. I'm desperate at this point. We get a volume confluence right here. So I entered, closed the candle, and this one happened to be a win, so we got to make some of our money back. So that was nice. Next trade on the day was Amazon. I took a trade right here, and the reason I did is because we had a volume confluence, big selling candle, popping down. Finally, we've been going against the side of the trade for a while because these are telling us we're going down, going down, going down. Look at the 30-minute MACD at this point in time. At this point in time, we're not really going down yet. We're just starting to go down. We're tapering off. And volume confluence popped down here. Entry was right here at this candle. Stop loss slightly above. And I took profits early because of my emotions. It did hit the first target, and it continued past the second, and even touched the third target. And had you had a lenient stop loss, this would have actually been able to hit the final target and even go further. So this was a great setup here, a great trade that I captured, but I ruined it by taking profits too early. Next trade on the day was Intel. I took this right here because 5-minute giving us permission. This 5-minute giving us permission. At this time in the day, we're already so far in the day that these 5 minutes are going to start to display the same data. They're going to start to become in sync. That's what happens after the first 2 hours of the market. And then the 30-minute was going down. So we had a lot of, a triple fractal, you could say, going down. And then right here, we had a volume confluence. But if it psyched me out. It didn't really pop down. I thought it did, but it didn't. The very next candle was another volume confluence, and it did pop down. So that's great. This trade continued on because obviously the target of my entry was hit quickly. It was hit right around here, and the price never came back, and it just kept going and going and going. And I ruined that because I ruined getting all of these profits because I moved my stop up. I moved my stop down, rather, to capture more and more profits. So had I had a lenient stop, like literally at the original or slightly above entry, then yeah, I could have captured all of this. But there was more entries throughout the day. These purple lines represent other entries that actually occurred. So that was my 6th trade of today. The next trade on the day was NVIDIA. I traded NVIDIA right here because same setup, same thing as always. Rinse and repeat. We have a volume confluence on the right side. The 5-minute is now giving us permission. It's happening right now. So, and our 30-minute is now finally starting to taper off. Entry was right here at the close of the candle. Stop loss slightly above. First target was hit, and then the remainder actually came up to hit the stop loss, and that's fine. That's considered a win right there because we sell 80% of the position or 90% of the position at that first target. So if the remainder of your position, 10%, goes up to hit stop loss, it's still a good win by far. The next trade on the day was Tesla. The last 2 trades on the day were Tesla. Let's see, what happened right here. Right here we have a volume confluence. We're on the right side of the momentum. The 5-minute is giving us permission to take trades to the downside, and the 30-minute histogram is tapering down. Entry was right here at the close of the candle. Stop loss slightly above. And I did the same thing again. I took micro profits because of emotion and fear. But the first target did get hit. Second target almost got hit as well, so that was considered a win. Even though it was really a loss because I ruined it. But the trade itself was a win. Next trade right here. We are getting permission from the 5-minute to take trades. The 30-minute MACD is holding the selling pressure, so that's good. We get no volume confluence here. which this must be wrong because the volume confluence was right here. I must have actually put that thing in the wrong direction. This was the entry right here, so this needs to be moved to right here. And that's where I took the trade. Enter at the close of the candle. First profit target was hit. Second target was hit as well. That was another win. So that was all the trades I took for today for this week. I will see you in the next one.